I want to share some perspective in SAU USD and to bring it to clarity. So I will have to delete some of the charts and I want to make this chart as brief as possible. So now you are going to take note of two price action at the moment. Those two price action are responsible for buy and sell at the moment. Now you see I have updated you with a sell supply roof. That sell supply roof today Friday will New York time set your sell order at 2,826. 2,826 sell order. That would be your sell order. Sell 2,826 into 2,830. Now I am going to state why that area is your sell order. The reason is because the strategy in the financial market is based on break of structure. That is a strategy that applies to everything tradable in the world. It's not just only gold, it's not just only copper, it's not only silver, it's not only aluminum, it's not only platinum. Everything tradable, euro, dollar, yen, Swiss franc, South African rand, whatever you're trading is based on break of structure. And the idea is this: if you want to sell, you have to first of all wait for price to establish a new high. When price establish a new high, institution come in to sell. Now they bought up. Now price create a new high. They sell down because the market for an uptrend is higher high, higher low, higher high, higher low. And for a downtrend, lower low, lower high, lower low, lower high. So it's the strategy. Now you see institution have marked out a supply roof. This is your institutional supply roof. The institutional supply roof is got from, let me take some of them out for clarity because this is basically for educational purpose. It is free. So when you clone the floor, you bring it to the roof. This is the exhaustion level of all the buying. When price gets to this level, price will ultimately drop. This is an institutional sell zone. At this level, institution are waiting here after price, updating here as a supply roof and updating here as a supply roof. On technical, this becomes your sell zone. So this is the only area. If you are a hedge fund manager, you are managing big fund, or you are among those influencers that say, oh, please give me 10,000. I will convert it to 20,000. Look at Shavyfxhub. I will never call you and don't ever call me. We are in this space not to help you grow your money. Go look for someone else who will do that. We're only giving you free educational to show you how we understand this market and how we approach this market. There's nothing we are charging you. So we are giving you this for free. So take advantage because we will soon stop. Free trade will soon stop. So we can focus on what matters most to us and to our team. So this is just it. So those your influencers will be telling you, no, no, no. At Shavyfxhub, we will never call you for anything. In case you do not know, there are prop firms. Prop firms are firms that these institutions are set up to evaluate traders who claim they are good traders. You have to pass through evaluation. If you pass through evaluation, assessing fund up to $1 million, $2 million, $3 million, it's nothing. So if you think you know how to trade, you go there. That is where you should go and seek your fund because there, that is the only place traders find discipline. A lot of traders will not have trade discipline. 99% of traders lack discipline. It's only prop firm that will teach you discipline because they have rules. If you play with their money, they log you out. They log you out. So please, let's be guided. I know a lot of people, as the the team continues to grow, a lot of people will want to use the name Shavi FSL. Will never call you, will never text you. Don't call me, don't text me. Don't even tell me, oh, how can I learn this thing? Oh, can you help me grow my account? No, 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 no. I don't have time for that nonsense. I don't have time for that nonsense. Yeah. We are not in this space to help you grow your account. Go look for someone else who will do that for you. So let's go straight to the point. So you see, price now, we have a 2 hours structure at this level where price updates here as a supply roof, and we have a break of a supply roof and price establishing here as a potential demand floor. And shortly after that, price came back to affirm it again under 2 hours time frame before the break of that structure married by a retest. And another retest confirming that this an ascending trend line is valid with a structure. Now, when price broke the structure again, it came down, market opened on a gap on Monday, Sydney opened Sunday on a gap, jumping the demand floor, indicating sign of bearish move. And exactly price did that after testing in the Asian session price move. New York session came back again. London section came back. On London session, they took the price down and sold towards almost mid halfway New York session. They bought it back on a fundamental data print. Market return to a demand floor. On the demand floor, you have a very strong institutional demand. Here we have a strong rejection to downswings, another rejection to downswing, another rejection to downswing, another rejection to downswing at 1,730, initiating an uptrend where price continue to make higher high, higher low, higher high, higher low, higher high, higher low. And this is the new high. The new high could technically take you to 2,833 if care is not taken. So, but however, we cannot jump into conclusion. We cannot jump into conclusion because we can. So let's be systematic and let's buy the whatever we are doing. Let it be based on what the market is doing. And if the market is not willing to do what we want, so be it. So now this is another thing. Let's clean this thing so that we can have a fresh air. So now let's see what next we're going to do. So now you see the market is approaching 2,800 level and rejected. Yes, after testing 2,800 mark estimated, it's expected that market should add more to it before the ultimate break of structure. So what I see now is the market is following two things. Now you see the most important price action for us now, and also your litmus test for continuous buy or sell is based on two line. And I want to change their color to blue so you can look at it. Wonder arbitrage is different. Oh. A lot of the reading there. So if you look at this reading on other brokers, it doesn't give you this breaker structure the way you want it. So I don't know why different brokers different reading, and I don't know why they are doing that. But I've looked at over 7 brokers, and I think this is okay. And we are on sell on that 2,800. But I have the belief that if you want to continue to go high, the structure has to break this roof. This is your roof and this is your floor. They are blue in color. The reason is this: you have a structure at this level. Price create here as a supply structure. We have a breaker structure at this level. We have affirmation of a breaker structure at this level. Market open Sydney on Sunday, jumped the broke the demand floor, returned it as a supply roof in Asian session and in London session. And during the time of New York bought it back. New York bought it back to return to the position where market open on Sunday, the Asians and the London sold the market. Now market is on that roof. So because market is on this roof, you cannot go beyond this roof. If we have a break and close above this roof, then we go long, expecting that market to add another 200 or 300 pips before we sell. So it's very clear. It is clear. The market returns to where it first sold on Sunday market open. On Sunday market open, you see what happened. The Asians sold the market. When they returned to London session, London retested it and sold it again. Now, by close of the market, towards the close of the market, on a strong fundamental data print against the DXY, the, the gold impetus resumed and they found buying again. They retested at 2,700 and the 33 and continued to buy that market. They didn't stop. They continued. So you see what happened here. We have three important points: point one, point two, point three, point four. The most important price action at this level is for you to see the ascending trend line on this structure and see why this is capable of acclimating price. At this level, look, let me tell you something. If we don't see continuous liquidity, the market will return back. It will return back to 2,762. Today we have very strong fundamental data print. When you look by the right, you will see we have USD core PCE price index. This is Fed Watch 2. Fed look at core PCE price index, MM. We have unemployment cost index, which is different from unemployment claim. They are not the same. We have FOMC member, Bowman speak. We have personal income data print, we have personal spending income and Chicago PMI. So this is too much for good. These data are too much for it, leaving you with a possibility for sell. This data print is way too much for good buyers. At this point, they might be exhausted. But however, if they manage to scale through, then you ask yourself, on this structure, where did selling happen? Again, on a higher sell. On a higher sell happen on this roof, happen on this roof, happen on this roof. So if they manage to escape this structure, then on technical, then you see price dip itself into my green zone. I will change the color to red, where you see 2,826 into 2,830 for market to return, because the market is impulse correction. So from there, the impulse leg is complete and it will take correction from that level. So on technical, what that means is that the impulse leg will move to this area, 2,825 into 2,830 and drop. And the most advanced impulse leg might extend this market up to this level, where you have it in the zone of 2,840, and then from that level the market will drop. I will put a sell order at 2,840. New York time, New York time, 2,840, 2,845. Then the most merciful at that level will be at 2,826, 2,830 for you to have a massive bearish drop. So this is what we see, and you see it's quite explanatory. The structure of the market keep updating you, giving you information before a further price action. And nothing here, it's a coincidence. Nothing here is a fake out. Everything here is well structured. Yeah, sometimes we are forced to use that word. If it doesn't go our way, we find a term, we find a terminology. When we are wrong in our analysis, we either call it market manipulation or we call it a fake out. But from my understanding, if it goes my way 90% of the time, I do not see it like manipulation. It's only when it goes against me that I now see it as manipulation. But I'll tell you from observatory point of view that nothing is manipulative in the market. Everything in the market follows structure. Everything in the financial market follow a set out structure. So every time you see market, market is dynamic, keep changing trend angle. So because of varying trend angle and trend direction, market can never be said to be straightforward. So it brings in a whole lot of technicalities, and this is where you see that technical details and technical understanding matters. So today we'll be viewing critically what the fundamental data brings will bring. But for me, the worst it will bring is to see that price breaks out from this structure, then come down here. These are the two sell zones. So I'm going to change the color to red as they represent a sell. So if you see price march into that zone, you should be thinking of selling. At that level, that will be a correction phase. That will be a correction phase to that bullish rally. Remember, the characteristics of the uptrend is higher high, higher low, higher high, higher low. So you are targeting a higher low. So if price gets to these two areas, feel free to sell. And we are going to wait at the end of the day to see if our analysis was right or wrong. It's for educational purpose, it's not intended to provide you a 100% profit in the market. But what it does is to give you a clue so that you can use this strategy add to other things you're doing. At Shavyfxhub, we do not use any form of indicator. My bias, my sentiment is not based on indicator. My bias and sentiment is based on the structure of the market and the fundamental data print the day presents. Yesterday data print analysis brought in the fuel, brought in the impetus for good bias, and they rallied on it. And as President Trump continues to threaten a tariff, this could technically mean a whole lot for the yellow metal. We could begin to see people selling off their bond, investing the money in gold. You could see that in this year 2025, the value of gold could rise to 3,000. It is also possible that the value of gold might rise to 3,000 points. This is possible. Like I told you before, you see, gold is reacting to sell on that structure. The reason gold is selling on that structure is not because it wants to sell, but because the market follow a set rule for sell and buy. It buy where others are buying and sell where others are selling. Even if it changes direction, go and check there. You will see there is an existing sell on that plan. Like I said earlier, the market is selling on this structure. Look at here. Market sold here. Break of structure. Use it as a demand floor. Return, break of a demand floor. And use it what? As another sell structure. Now you see price again went up, picked up liquidity from where? We're selling at the upper roof. This is upper sell. And on this upper sell, I have caught this trade. The upper sell trade is 2,823. When we expect that if price manage to get here on fundamental data print, if we initiate a sell order, 2,826, 2,830, we initiate a sell order. Then a higher sell zone is going to be at this level, 2,842 into 2,850. So let's set that. Let's set it. Let's set that higher sell. Higher sell will really make a whole lot of sense. 2,846 into 2,850. It is based on structure, strictly based on structure of the market. So we might have even early trigger. So let's put it to accumulate early trigger so that from that zone you begin to see yourself in a in a cell net. So let's start from 2840. Sometimes the market might not push in into a whole number. So you see at this level, the market at 2,840, market could begin to show some sign of reluctance. So from that level, you see that the market will continue. It might extend into 86 and lastly claim into whole number 2,850 and show you a clear bearish drop. So they see the reason the market is rejecting this level is because the market has tapped into a supply territory. Now you see what I was explaining before. After a break of a supply route, price returns here to its at a demand floor, and the market opened Asian Sydney time on a gap. There is a gap here. Market opened on Sunday. That Sydney Asian section came in, rejected that structure after break of a demand floor, and they sold down. And when London came, London time, 10 o'clock, they sold when price returned. You see, the Sydney sold the market, the Asians bought the market, the London sold the market. When they returned to New York session bought the market. They bought the market, came down here, got rejected because we have a very strong price action at this level, and ultimately broke the structure and is serving as a demand floor. So if you want to sell, now we want to see a break of structure from the demand floor. So a break of this demand floor will ultimately push this market to this area. The reason is because you have a price action for demand on the floor. You have here price creating here as a demand floor, and you have price creating here as a supply roof. The two structure forms a pivotal point that holds price for further downswing, and that is why when price rallied into 2,800 mark, you use it as a demand floor. So you see that is why you have 2,790, 2,791, pretending to provide a demand floor for uptick, and price are consolidating within this one. So what we are looking is for a clear breakout. So what does this mean? If you have a breakout to the upside, you are going to the moon. If you have a breakout from the downside, you are going down. So let me explain it in a way that it will make a whole lot of sense. That at this point now, you see, we have two litmus tests here. This is our roof, this is our floor. So if we break out from here, it's a potential buy opportunity into another 200 or possibly 300 pip move. This is what you get. Now the second one is this. If we break down from this structure, from this ascending structure, you will have a retest and you will return back to the demand floor. On the demand floor, you have an institutional a whole lot of institutional buying order waiting for you at this floor. So at this floor, set your buy order. At this level, you have your buy order at this level. So at this level, market is waiting for you for buy. So be very careful with these big wicks. I am more particular to see when we have a 4 hours or a higher intraday candle break or structure. If we have that, I want to see a potential retest before I change my bias to see if the selling will continue. So what we see here is not really something much because the temperament of the market at the moment is aligning with its sentiment and which remains bullish. So at the moment, it's going to take a whole lot to see gold dumping. I will tell you 2028, 2025, gold could technically become something else. By close of 2025, according to analysts and other brokers, now, there's something that happened recently. A lot of gold bars are leaving London Gold Exchange and moving into United States due to the tariff fear. You see, this shortage of gold at this moment could technically bring in the idea of demand and supply to shoot the price of gold up. A whole lot of tons of gold are leaving London, the biggest gold market. London is the center of gold market. all brokerage, all transaction, heavy transactions of gold go on in London Gold Vault. So a lot